This is a powerful rally, a combination. We got the laggards like the semis moving along with the big market leaders like the retailers. We're 6 points away from historic highs. Just want to point out the dollar's been helping a little bit. Don't normally talk about the dollar, but it's been moving the stock market a little bit. We've been down 5 days in a row, the dollar index, and not just since the president's been talking about lower rates. That was yesterday. We moved the dollar down, but we're down about a percent and a quarter in the dollar index in the last 4 or 5 days. Take a look at sectors here. That has helped, notably helped emerging markets, which have finally come out of their funk. Metals and mining stocks, which have had terrible performance for the past couple of months. They, too, have come out of their funk. Semis today have turned around. That's been a weak sector. So you got a powerful rally here. Retail, which has been a market leader all along, has been strong here. So in terms of where we're at right now, we hit historic highs yesterday on the S&P small cap. That's the 600. We hit historic highs on the S&P mid cap. We are essentially at records on the transports. We're standing right at the door. The S&P 0.5%, less than that now. Well, we're 0.2% in the last 10 minutes. The NASDAQ still lagging, almost down about 2%. That's been interesting. But the key to the market has been the rotation. We keep talking about this and how we've been doing here. But by and large, if you take a look, while semiconductors were weaker recently, we had a rally in some of the airline stocks. We had healthcare, huge momentum in biotech, huge momentum in pharma, a lot of big names on the new high list there, like Merck and Pfizer every day. Retailer, the XRT hit a historic high yesterday. Staples have rallied about 10% since bottoming. That was back in the end of May and the beginning of June. So this rotation, as one part gets weaker, the other part gets stronger. It's been the key to the market's success. We're about to enter into the longest running bull market of all time. This has been much anticipated. The bull tomorrow will turn 3,453 days old. I know that's kind of silly, but the old bull record was October 1990 into March 2000. That was almost 10 years. We're about to beat that. March 9th was the bottom, 2009. Remember that? The S&P 676. On March 9th, 2009. Do the math. Since then, we're up 322 points. People always ask me what matters. There's this actually, because the S&P is market cap weighted, there's a small group of stocks that really did push the markets forward, not by themselves, but if you take a look at the ones that had the biggest contribution, Apple was 4.1%. So if the S&P was up 100 points, 4 points of that would have been contributed from Apple. That was the biggest single contributor. But Microsoft was also contributed 2.5%. JP Morgan, believe it or not, General Electric. Now, we're talking from the 2009 numbers here, and Wells Fargo also. Amazon was sixth at 1.4%. You do the math here, and you've got 6 companies contributing maybe 13, almost 14% of the gains in the S&P 500. Again, that's going to happen tomorrow. We will not bore you with all of the discussions we have had online and in the committee meetings about whether or not 20% matters and what matters in bull markets. If you want more about the new bull market, tradertalk.cnbc.com. We have all sorts of discussions on what would constitute a bull market. But let's not bore you. Right now, we are only 6 points from an historic high on the S&P 500.